Good morning and welcome to Indian Open right here on BloombergQuint Live. It's Thursday morning and it promises to be a day which will start off in the red. The key is, can we build on from there or will we succumb to some bit of global pressure? And I think globe is the more important thing that we'll talk about with Mark Matthews. Should be joining us any moment from now. I just want to lay the stage that we've had the details of one part of the details of the relief stimulus package, whatever you call it, from the government side yesterday in the extended press conference with the finance minister. Detailed things laid out, not as much fiscal stimulus as it is a bit of backstop and guarantees and some bit of monetary as well. And therefore, maybe the markets are upset a bit because they were building in for a lot more. Let's wait and watch if the second tranche has something. Typically, you would presume that the first tranche and the best tranche is laid out first. And therefore, I doubt that anything dramatically better from other stands can come in. So you have to keep that at the back of your mind. But as I said it, I mean, the markets are looking weak. The SGX is already showing that. And as I said in my trade setup today, that it might be back to the global playbook. So let's try and understand the global playbook currently, and then India within the global playbook with Mark Matthews. Joins us right now, needs no introduction really. Mark, so good having you. Thank you so much for taking the time out. I'll come to India in just a bit, Mark. Just a quick flash thought on what do you make of all that's happening in the world in the last 20 to 30 days? Jerome Powell's comments last night set the cat amongst the pigeons of sorts.
So I guess there's two questions there. The first is nobody, including myself, foresaw the kind of V-shaped recovery in the markets that we have had. I think even if you had told us about all the fiscal and monetary stimulus that's come out, we still wouldn't have envisioned the NASDAQ being up on the year and just less than 5% below its all-time high. And the S&P only where it was back in October. Given all that's happened since now and then, it's nothing short of incredible. Having said that, our view is that this is a structural bull market still. And the only way we could believe that to be true, of course, is if we think that the virus is going to go away. And there, I won't claim to be an epidemiologist or any other kind of scientist who knows about those sorts of things. And even among those people, there are huge degrees of debate. But our view is that it probably should kind of peak around now globally, and then we'll have choppy outbreaks here and there of second waves and third waves as the economies reopen in various parts of the world. But around 2 months from now, then it'll just start to go away. And if that's the case and we move toward a more normal economy next year, then all of the stimulus that's been put in place this year is basically providing a bottom to the market. So it's not going to go down that much because people are already thinking forward to recovery. Now, just on your second thing, Jerome Powell, actually, I thought that in his speech, which was unscheduled, he would be basically scolding the market for thinking that negative interest rates were possible, because as you may know, Fed Fund futures had been pricing in last week negative interest rate in January of next year. But his speech was actually the opposite. It was calling for more fiscal stimulus from the government and saying the economy is in a precarious state. So, I mean, it's one of those bad news is good news things, but I think that what you could infer from that is there will be more coming from the government.
Mark, how do you place countries which have very limited fiscal headroom and are trying to do their bits to stimulate or give backstops to critical spaces versus the other options available, the likes of US or the others? Because India announced that that big speech by Prime Minister Modi to give stimulus, which could be a tune of 10% of GDP. A large part of it seems to be monetary in nature. How does that stack up for somebody who's choosing to invest in India versus other options available?
Well, we do think that the ability of countries to provide fiscal and monetary stimulus will be important. And where that will be felt probably is more in their currencies than the financial markets, stock and bond markets, because there's a ripple effect through the stock and bond markets In other words, if the Fed is buying investment-grade corporate bonds and high-yield corporate bonds, that will trickle through the whole food chain to end up helping, for example, corporate bonds in India. But where you would see the the inequality of governments and central banks is more in the currencies. So we would expect broadly more weakness in currencies where the government and central bank don't have the ability to really pack a punch. And then again, on the other side, what we have to admit is, and it's a great mystery, why most of what I would, for lack of a better word, call it, is the emerging world, and I'm including India in that, has not been so devastated by this virus as the West. And it's pretty obvious, even if there isn't as much testing, it's pretty obvious that it's not hitting India and other emerging markets to the same degree as it did Europe and America. I can't go into the details why. I mean, Australia and New Zealand are developed Western countries, and they managed to escape it more or less. But what I guess I want to say is that the actual economic lockdown has caused a lot of damage. But I think there can be some degree of resiliency in emerging economies in returning to work, simply because they were never really devastated by the virus the way, Europe and the US were.
So, okay, in which case, since India is not quite going out all guns blazing on the fiscal side for the stimulus, which could probably help not stretch the already stretched balance sheet too much, Mark, and the resilience of EMs that you mentioned. My question is, at 19 times or 18 times trailing earnings for MSCI India, is that looking like an expensive market, or would you believe that such valuations with a bit of dip could sustain?
Well, I prefer to look at it in price to book terms in years like this, because there won't be any earnings anywhere. And actually, India on slightly north of 2 times is a long way below its historic long-term average of 2.9. So on a valuation basis, I think it looks good. But I also think that the market will reward growth rather than the value in an environment of low interest rates. The trend that we've seen of growth outperforming value primarily in the US technology stocks is continuing. It will continue, because in an environment of low overall global economic growth, people will go out of their way to pay up for where they perceive to be the individual cases of growth, for example, US technology stocks. And I'm sorry to say, in that context, India doesn't rank high. India bizarrely ranks pretty well as a value proposition relative to its history, but the growth is absent, and there we could fall back on, what you were talking about, the economic package that was announced yesterday, and I believe there are more tranches coming. But in and of itself, I didn't see it as being a major catalyst for really getting India's economy back on a growth trajectory. I see it more as a bridge to just get over, the damage caused by the lockdown. But often in crises, you get opportunities. In 1991, I think most people agree, was like that. India had a balance of payments shortfall. It had to go to the IMF, and that resulted in the reforms, the shutting down of monopolies and reduction of tariffs and opening up the economy. And that really ushered in a great wave of structural growth for India. I was hopeful. I mean, I wasn't thinking it was bound to happen, but I was hopeful maybe something like that would happen this time. And I have to say, I'm sorry to say it isn't, because that isn't this kind of reform package.
Okay, Mark, just one final thing. So is that something that you would look for as somebody sitting overseas and looking at a bunch of markets? What is that? I mean, I know there are multiple things that need to be done, but what is that one thing that could make you look at Indian markets with some bit of optimism compared to whatever your level of optimism might be right now?
Well, there's many more than one. I am structurally positive on India in the long term. I mean, I think it's quite interesting that a big company like Apple could move a lot of manufacturing to India. That would be a real game changer, for example. But the big one is the non-performing assets. Those are really crippling the ability of the private sector to access capital. And I think that there'll be a very long organic process where deposits will simply move over time from the bad banks to the good banks, and therefore that itself will strengthen the financial system. But that will take a long time, and I would have preferred if the government had seized this opportunity to really, fix the NPA problem, get the banks sorted out, so that when the economy does recover next year, you're in a strong position to lend.
Well, let's see. We have a bad bank proposal in the works, Mark, and maybe ways like that could probably help. But I think it'll be fruitful to see what the details are before we kind of speculate. But this was so good talking to you today, Mark Matthews. Always is. Thank you so much for taking the time out.
Thank you.
All right, that's Mark Matthews with his thoughts on the world and India, and it looks to be an interesting day. Okay, just a quick perspective from Parthiv Shah as well, Johnson, right now, before we get into the nitty-gritties of the announcements that were made yesterday. Parthiv, just a quick broad brush. Do you reckon that the markets are headed lower post the small uptick that we got after PM Modi's speech?
Good morning, Neeraj. Yes, certainly, Neeraj, it seems that today the markets are going to head lower. And the reason is also global cues. I think since last 2 days, we are seeing Dow and the European markets also heading lower. And I think there are some scary comments, especially in terms of the global macro front. When Mr. Powell, last time he talked about, he said that, the recovery will take place thanks to the massive stimulus that has been given. And he was sounding a little more optimistic in terms of the curve of the recovery. But yesterday's speech, I think, did spook the markets, because now he is hinting at that the recovery is not going to come soon. Rather, we'll need more stimulus to be pumped in. And despite the fact that the stimulus that US has already pumped in is not seeming to be enough for the world's biggest Fed governor, I think that is a little scary. And that's the reason why the US markets have kind of reversed, and we'll certainly have our impact. It seems more like, Neeraj, that our markets are going to stick to a range, and our sense is that on the downside, a level of 9,100 would be respected, on the upside 9,500. So I think it's going to be a little consolidating type of a market. But yes, I think even the stimulus measures that have been announced by India, no doubt yesterday, the phase one of the announcements, only around 20,000 crore worth of fiscal impact. The rest is all like credit guarantee. So I am not really sure how much of that will be liked by the market as well. There'll be some stock specific, sector specific reaction, maybe sectors which are related to the discom sector, which are related to the MSMEs, etc. But I really doubt today is going to be a good day for the markets. I think we'll be seeing a declining trend.
Okay. Let's talk about some positivity then. Sharad Dubey Johnson, with the moves that were announced for the power sector yesterday. Lots of them, Sharad, but let's try and encapsulate the most important things.
Well, yes, good morning, Neeraj. RESC PFC will actually extend loans to almost 90,000 crore rupees, going to power discom companies, which will be paying it to the power producers like NTPC and even private players. The loan will be provided against the 94,000 crore receivables for the discoms, and the loans will be secured against the receivables and the guaranteed by the respective state government. So basically, the concessional loans to the state electricity discoms would be lower than the usual lending rates, and it will vary from state to state. Now, Neeraj, if you look at the conditions for the loan and go into more nitty-gritty, of the package announced, the digital payment facilities will be used by the consumers, which are the industries. And apart from this, the second thing would be the liquidation of the outstanding dues of states government and the overall plan to reduce the financial and operational losses. The discoms overdue picture, which we have seen, post the Ujjwala plan, has been almost 80,000 odd crore rupees. And for the March itself, the dues stand at almost 94,000 crore rupees. Now, if you see what the discoms will be owing to the producers, you see NTPC on a standalone basis itself is having an amount of almost 10,586 crore rupees, with Adani Power coming in at almost 5,000 crore, and NHPC and GMR Group, scintillating between 2,100 to 2,800 crore rupees. Now, the experts did talk about the positive impact, happening on the short-term liquidity, and it will actually help the entire value chain. But they did show concern, especially the larger issue of the strong financial sustainability going ahead. There will be a short-term positive impact for the generator companies like NTPC, NHPC, Power Grid, which will actually help them reduce the working capital. So FM did actually add, that the public sector generation companies will give it a rebate to discoms, which will be passed on to the financial consumers. So overall, a short-term plan which will be good for the power players. Back to you, Neeraj.
Thanks a lot for that, Sharad. Parthiv, what stood out for you? I mean, the proposals are now known. Sharad has enumerated them. What impact on stocks do you reckon this move can have?
See, Neeraj, very frankly, I don't see a very big long-term impact on a lot of these stocks, which will have like some sort of ease, thanks to a lot of their pending receivables from the state discoms. Again, I think there's a lot of catch in this 90,000 crore package that has been talked about. It's like not really a compulsory money which is going to be going to the state discoms finances. PFC and REC, I think are going to check state-wise, and there's going to be some sort of state guarantee arrangement, and we know how long it takes for a lot of states to come on board with such packages. So I think it's not going to be that overnight all these companies who have pending receivables are going to get that money. So I'm not very optimistic, and if you see the problems that states are facing in terms of their deficits, they are humongous. So I really doubt a lot of states' ability to further be guarantors to such sort of a package. I think it would be a lot better if this money had gone directly to the coffers of a lot of these discoms in terms of giving them direct credit. But nonetheless, I think whatever it is, we have to take it with both hands. And I feel that in terms of any sort of sentimental impact today, we'll see it coming from likes of NTPC. No doubt the balance sheet is really strong, and this 8,000 crore sort of a receivable is not going to have a lot of impact. But I think there'll be a sentimental positive impact. We are even looking at stocks like Torrent Power, which have very good integrated business model of being a power producer, distributor, transmitter, and more importantly, I think the fuel cost, which is heading lower, I think that should help them aid their margins. So we like a story in Torrent Power. I think it's a good, reliable business, and we would prefer that over a lot many other power sector stocks.
Okay, so Torrent Power versus some of the other power sector stocks is what Parthiv is saying he prefers. Now, I know it's time to get to our technical experts, but very quickly, let me get in first my colleague Nikki Mirchandani to talk about the key stocks and news in a nutshell, and then we'll move on to the technicals. Nikki, what are the stocks that one should be monitoring today?
Sure, I have three results to begin with. Godrej Consumer, where the numbers have been below estimate, and there is the Indian business volume has seen contraction of 15%, where the PAT has also declined on account of tax deferred reversal that was seen in the base quarter. But overall, the numbers look weak. Indonesian business has been stable. Indian and African business, they have seen some amount of weakness, some amount of positive commentary coming in that the management is expecting, is optimistic right now on Indian recovery. Emphasis, relatively a better than estimated numbers on account of strong direct core revenues. The total contract value wins in the direct international business stood at around $201 million as compared to a figure of $150 million in the previous quarter. Overall, the new gen services led higher deal wins in the quarter. Siemens below estimates, where the sales were down by as much as 21% due to deferred offtake by customers and weakness in infrastructure as a whole. EBITDA too degrew by as much as 43% on account of higher other expenses. Separately, the development board has agreed in principle to sell its mechanical drive business to the parent company Siemens AG, which is around 5% of the overall business structure of Siemens as a whole. We're looking at some amount of negative development coming in for PFC and REC after the FM announcement to extend loans up to 90,000 crore to Power Discom to pay their dues to power generating companies. Although it's a step in the right direction, but you can expect some amount of negative reaction on these two counters. And also we're expecting some kind of reaction coming in on the NBFC pack as a whole and relatively the stable names after FM announcement of 30,000 crore of liquidity facility for the housing finance, NBFCs and MFI. This is expected to be positive for their margins, and the measures also show some positive intent to step in as a risk taker. So something like a Bajaj Finance should do well in today's trade.
Well, thanks for that, Nikki. So those are a few stocks that you need to monitor. It's an interesting thought before we move full tilt to technicals. Parthiv, it's a beaten down NBFC, the highest quality of sorts. Brokerages today have said that maybe work from home and a lot of other factors will probably drive demand, and things may not be as bad for Bajaj Finance as it seems. What's your thought?
Neeraj, somebody very nicely put up, in a country where there is a lot of ask for a stimulus, only those companies will do very well who really don't need a stimulus. And I feel that a company like Bajaj Finance, I think we did discuss this last time and I was a little negative on it. And the reason for my negativity is not because I'm afraid of the quality of the balance sheet or afraid about the survival of this company. It is only about the fact that even at this juncture, it is quoting at around 4 times price to book multiple, wherein I think the growth that we have seen in this company, thanks to their massive ability of raising funds and thereby growing their AUM by almost 30-35%, is seeming not going to happen. Despite the fact that we have a lot of talks of digitization, but the consumer behavior, the way it's going to change, I think it's very difficult to predict that trend. So even if this company were to grow at a very healthy rate of 15% AUM growth over the next 1 year, 1.5 years, that's for not the market is going to reward this company or further re-rate it. So I think I would be buyer in this company for sure, but I would look and seek for much lower levels, maybe levels of somewhere around 1600, 1700, where at around 3 times forward price to book multiple, I think it seems that it will become very, very compelling. So that is my theory on Bajaj Finance.
Okay, Parthiv, stay on. Want to talk about the results, ABB, Siemens, Godrej Consumer, all of those as well. But let me take it to our technical experts and derivative experts to try and figure out what to do in a scenario like this. Samit Chavan as well as Aditya Agarwal join in right now. Gentlemen, both of you, good morning. Thanks so much for joining in. Thanks for waiting patiently for the last few minutes. Samit, I'll come to you first. What's your approach to trade today, considering that we will start about 1.5% lower?
Morning, Neeraj. Yesterday we had a huge gap up opening on domestic triggers, and then we started reacting on global peers. Looking at the close, we were looking at the close somewhere around 94.50, 9500. That would have triggered some kind of short covering move. But the way we closed yesterday, it clearly suggests that we have slipped into a consolidation mode again. So on the higher side, 9500 again, becomes a strong resistance, and as long as we are trading below that, this consolidation within the range of 400 points is likely to continue. See, for the day, we have kept, a neutral strategy, before the opening. We would reassess the situation, after the first half an hour. But in case if, as SGX Nifty is suggesting, if you open somewhere around 92.50, we would be a buyer. We believe that for the day, 9200 would act as the support, and from the levels of say 92.50, 92.30, we are likely to see some kind of recovery probably towards 93.49.
So you would be a buyer at the dips today, Samit, or maybe at slightly lower levels?
Yes, around, as I said, 92.50, 92.30, we would be buyer, and till then we would clearly focus on individuals.
Okay, I think I was just getting a bit confused in my on the voices as well. Aditya Agarwala, what are your thoughts today on trade? We'll start off lower. Would you be optimist as well, and would you be a buyer at lower levels?
Yes, I would agree, Neeraj, with what Samit said. The one thing to notice is now we are comfortably trading above the 20 DMA. 20 DMA for quite some time is now acting as a support. Barring day before previous, on Monday we did witness a close below 20 DMA, but overall we are trading above 20 DMA comfortably, and 20 DMA somewhere around the levels which Samit spoke of, 92.30 to 92.40 on the downside. So closer about to 9200, I definitely believe is the lower end of the range. Overall, we are trading in a narrow band of 9200 about 9450 to about 9500 on the upside. So closer toward the lower end of the range, 9200, yes, I would also go long on markets, keeping a stop loss somewhere around 9100 and look for a pullback back to levels of 9350 to about 9400 on the upside. Overall, just wait it out for at least 15-20 minutes, see how markets open and react post this 150 point gap down open. If 9200 levels hold somewhere between those levels, definitely one should look to go long on the market.
Okay, so how do you then nail it down to specific stocks is the question. Aditya, I'll come to you first. What are the stocks that you're recommending today?
So Neil, the first stock I'm recommending is Concor. Stock has been consolidating in a bullish flat pattern, and in trade yesterday it broke out from that pattern on decent volumes. At current levels of 380, it makes a attractive buy for target of 410, keeping a stop loss at 360. The second stock recommendation is a short on Apollo Hospital. Stock continues to witness lower lows, lower highs, and recently it turned lower from 50% retracement level. It couldn't even cross that 50% mark, and it turned lower. It's a matter of time before it breaks down from the immediate support of 1280. So one can look to go short on Apollo Hospital futures below 1280 for a target of 1220 on the downside, keeping a stop loss at 1320 on the upside.
Samit, what about your ideas for the day?
Yeah, yesterday, despite we have seen some, sluggish moves in indices in the latter half, but Indian stocks were still, bucking the trend. And we would go with a couple of long ideas only. Concor, again, I have a buy call on Concor. Looks good. Yesterday, PSU stocks were buzzing, and this stock, has managed to surpass its recent hurdles. So looks good, and we would expect this stock, surging towards 398 today. So one can go long with a stop around 368. And second buy would be on Bata India. If you look at the daily chart, it looks quite encouraging, and the way it closed yesterday around its recent highs, we believe that the breakout is on card. So we go long on Bata India for a target of 1460. It's a positional buy with a stop loss of 3.
Okay, now the interesting ones, and we'll make it quick to try and cover as many as we can. We discussed the power names with Parthiv. Parthiv, what does this do for PFC REC? Do you reckon they could start off lower because the burden of the state power dues receivables now shifts on the balance sheets of these two?
Absolutely, Neeraj. I think that's the logic which you rightly pointed out, and I believe it's a little negative for them. And as such, I think these are the type of NBFCs which I've never preferred, because we always seen that whenever there's any need, government tends to use them to bail out a lot of state discoms, and their balance sheets are getting stretched, getting deteriorated, the return ratios are getting deteriorated, and that will also in future impact their fundraising ability. No doubt they are raising a lot of global funds, but I think I'm really wary on the outlook of these.
Okay. Parthiv, the other thing is the results that came in, and from two majors, ABB and Siemens, both of these looked slightly off. I mean, I actually thought that the ABB numbers was quite a howler really with the margin and the operational performance. What did you make of them?
See, I think multiple reasons, Neeraj. One is deferment of orders from a lot of customers, and all the segments that ABB is into, especially robotics, automation, I think they degrew big time. And I think there is a huge operating deleverage that takes place. And as a result of which, and even if you look at the employee costs, they have kind of gone up, the other expenses have gone up without any sort of operational income, and that's really dented the margins. The only saving grace I would say for ABB is 10% uptick in terms of the order intake, and some sort of management commentary in terms of demand for digitization of a lot of power related projects to help enhance the productivity. But I think it's going to be a very, very slow grind. And even in terms of Siemens that we talked about, I think even in Siemens, if you see all the verticals, they are into so many different verticals which are related to capital goods and industrials. I think they are really growing extremely slow, and I think the results were a miss both on sales and the EBITDA front. But I really doubt, I think these companies could really recover. It's the only saving grace is that both these companies have an extremely strong balance sheet, which will help them to probably take care of the current scenario.
But the numbers were so bad from ABB, EBITDA margins down 90%, rather EBITDA down 90%, EBITDA margin contracting about 691 basis points. The other quick thought, and we'll discuss this in detail. Actually, let me discuss Godrej Consumer post-market open. I just wonder on the charts of the derivatives, Siemens and ABB. Samit Chavan, you want to come in on these two?
No, as far as ABB is concerned, we avoid this counter considering its overall movement. But as far as Siemens is concerned, it seems that around 1,950 this stock has a strong support. So we'll have to see whether this stock manages to surpass its recent hurdle or not. So 1080, 1090, these are the levels to watch out for in case of.
Okay. Well, so do watch out for those names as well. Aditya, do you have a quick thought on ABB? Samit, of course, avoids it. What about you?
So Neeraj, if I look at the longer term charts, I've flipped to a monthly chart, and there the 200 monthly moving average is somewhere around 800 odd levels. Stock has been holding on to those levels from quite some time, around 2006 onwards. It has been holding on to those levels. So if it comes out closer to about 800, then probably it's a good buy. Apart from that, definitely it's an avoid until unless comes close to about 800 odd levels. If it's a gap down opening in trade today.
Okay. Stay on, gentlemen. About 30 seconds left for the markets to kickstart trade. The key is whether we will see that support that Samit and Aditya are talking about at lower levels and some buying, and could that help the markets? Watch out. Banks and some NBFCs might have some room to cheer as well. So it will be interesting to see what we do. I mean, I think everybody is believing that the start of a new downtick may not be, if our experts are to be believed. Let's wait and watch. But watch out for the likes of Z, the likes of the metal names, all of which were up and active in trade yesterday. Let's see what happens to JSPL, JSW Steel and the others. But here come the first rates on the pre-open session. Mind you, we'll just cursory mark the pre-open because that doesn't kind of give you a correct picture in the first 1 minute. At the end of the first 8 minutes is when we'll probably get a correct picture. But the first rates, I don't think we'll have a green. The Nifty 50 is flattish, Sensex is in the green. I think that will change. Let's wait and watch what happens to individual names. Again, I repeat, this is just the first 1 minute, so rates will be very volatile. Let's wait and watch what happens at the end of the first 8 minutes. But, well, stocks like Adani Ports, Axis Bank, HDFC, Reliance, all of these look like starting off lower. Bharti Airtel looks like starting off lower, but these rates may well change. CLS has given a big upgrade there on Bharti, so be mindful of that. NTPC has this flash uptick of 5%. I don't know if that will last. Maybe that will change. Bajaj Finance looks like being in the green. Again, don't know if it will last. HDFC Bank looks like being in the green. And again, I don't know if that will last. So these are a few names that you'll be mindful of. But if the market starts off about 1.5% lower, then most of these greens would actually go into the red, and that should be a bit of a concern. Let's wait and watch what happens. I want to mark some individual names as well. So yesterday amongst the principal movers was Z Entertainment. I wonder what that would be doing in the session today. Let's wait and watch. Ended at about close to 168 or thereabouts. It'll be interesting to see what Z does in trade. So do watch out for that one. Then I would watch out for ABB. It looks like starting about 3% lower. So let's wait and watch if that one continues to be that way, or does it succumb to further selling pressure, because the numbers were really very, very poor. And that Godrej Consumer, which trades at reasonable valuations, and we'll talk about that with Parthiv as well as Samit Chavan and Aditya. Can that sink further on the back of these numbers, or will valuations give it a support, and does the chart give it a bit of a support as well? I think that is something that we'll try and figure out. Last but not the least, do watch out for the likes of Reliance Industries. Yesterday was showing some signs of a pullback. There were some technical buy calls too, but looks like starting off wobbly today. Let's see if this is how it behaves. So there's a few names that you have to be mindful of in the session today. But looks like we'll start off about 1.5% lower now. The Nifty 50, now the pre-open session is showing a rate which is believable, maybe about 1.5% lower. But coming to some of these active movers, actually the one that has been very resilient the last few days, but somehow in yesterday's session was showing a bit of a distribution pattern, Samit Chavan, was Bharti Airtel. CLS has this big upgrade today. It's a sector that is finding positive commentary from the fundamental side. What about the charts or the derivative positions?
Clearly, Neeraj, it is getting reflected in prices. If you see in last 5-6 months, this stock has been clearly outperforming, and the kind of moves that we have seen in last couple of months, it is quite encouraging. Such kind of market scenarios, this stock has been bucking the trend, and now it has reached its all-time high. So that suggests that the kind of participation this particular counter has. Yesterday we saw mild profit booking, and it is evident also stock was nearing its previous highs. But overall, if you see, the structure is quite sturdy, and from here on, considering another 4 to 6 weeks from here on, we will not be surprised to see this stock even heading towards 600.
Okay, but a bit of a corrective move in the session today on that one. The other one, which is fairly active the last couple of days, as I said, is Z Entertainment. Yesterday was a big bar on the upside. Aditya, any thoughts here on the technicals on Z?
So Neeraj, stock has been consolidating in this band from 140 to about 170 on the upside. Overall, stock hasn't done much for itself, but considering the fact that it is sitting at extreme oversold levels, there can be some more upside to the stock. Probably 180 to about 190 cannot be ruled out. If it sustains above the immediate hurdle of 170, one can actually look to go long here for a target of 185 to about 190 on the upside, keeping a stop loss at 160 on the downside.
Okay, let's wait and watch. This moves today could be interesting in nature for some of these. Now, the other one, fundamentally Parthiv, is Godrej Consumer, and we're seeing the impact that the moves are bringing in for anything related to consumption. I mean, Nestle came out with good numbers and got beaten. HUL, and we all know what happened post the results as well. What about GCPL? The valuations are not as rich, but the numbers, volume growth decline of 15%. was pretty stiff, I thought.
See, Neeraj, I think Godrej Consumer Products was having structural problems even before, I think, COVID, and especially these results and the management commentary offers no respite in terms of any sort of structural revival in terms of the growth. See, the problem is like even if you look into their earnings for the last 5 years, they have grown at a compounded average of 9.6%, which is far lower than most of their peers. And even the key segments, even if I were to consider the volumes of the key segments this particular quarter, soaps have declined by like almost 23% year on year, which is a huge decline, and a lot of peer commentary is not necessarily as bad as how they are showing, which means they are probably losing a lot of market share. Even very stronghold products like household insecticides were down by 16%, and hair color, which is again another strong forte of Godrej consumers, down by 23% year on year. So this does not really give any sort of confidence that they'll be able to revive this very soon. Even the international subsidiaries were also quite tepid. So I think despite the fact that in terms of valuations is quoting a little lower than most of its peers, but if you look into their ROE numbers and ROC numbers, consistently they've been a lot lower than their peers, and that's the key reason for the valuation discount. I don't see much respite, and I really doubt if the recovery could be any stronger over the next 1 or 1.5 years. So I think we are better off looking into other names where valuation comfort is there, management is innovating better, and trying to gain market share from their peers.
Parthiv, upstream oil, is there any favor? What would your reckoning be? Because the valuations are such, since you're talking about valuations are certainly favorable, but just that oil is such a volatile commodity. What do you do with ONGC, Oil India, maybe even the oil and gas business of Reliance?
See, unfortunately, Neeraj, what happens is, however low may be the cost of production from assets of ONGC, Oil India, even Kane, which is now part of Vedanta, the problem is the tax structure that we have in the country. I think that is also helpful, tax and royalty both. So especially when oil prices are hovering at around $25-30, it does not really make a lot of sense for a lot of these companies to generate sufficient cash flows to go into more exploration. And without further capex in exploration, which is a long gestation period, I don't see much respite, even when in a scenario when the oil prices improve. I recollect ONGC stock not doing well even when oil prices were high to the tune of $80, and now it's even getting worse. So I think this is not the sector that I would like to invest in.
Yeah, okay. Don't invest into these names afresh. As the pre-open rates settle down, 1.8% lower, 9215. For a lot of viewers who are tuned in right now, I just want to revisit those quick thoughts from our experts as well. Samit, we are at about 9214, 9215 in the pre-open. I suggest that we'll start close to 9200. You would wait for the first 15-20 minutes to settle down and then try and take a contra call that you were recommending?
First 5-10 minutes, yes, I would certainly wait out. But if it stays around 9230, 9250, as I suggested, it would be a buy. I would rather go long in 9200 call option. If it trades somewhere around 30 to 40 bucks, that becomes a good fund.
Okay. So, well, Samit is fairly confident about this looking like, but remember, things could change. If we dip below 9200, stay below that, then it's a separate thing altogether. Keep in mind, the Wall Street futures are pointing towards some bit of green. So the global playbook might be different today compared to what it has been in the last couple of days. So you have to bear that at the back of your mind. Okay. The pre-open rates have completely settled down and we need to watch out. ABB is actually not starting off all that poorly, just about a couple of percentage points. What is doing well is Jubilant Life, up about 449, 450, up about 5%. So that's looking very, very interesting. Reliance continues to grind lower. So that's the other thing that you have to keep in mind. And NTPC marginally higher, about 0.25%. Parthiv, are you a buyer in Reliance? It's no longer at 1600. It's back to about 1470 odd levels.
See, Reliance, I think now, as we all know, the play is surely going to be the holding in Reliance Jio Ventures. I think that is where now all the excitement is about, and probably the market is envisaging that over the next 3-5 years, with all these global partnerships with likes of Facebook and a lot of very credible private equity names, the ecosystem will just grow bigger and bigger. And I think, Neeraj, the excitement is more about the fact that such type of business models tend to get massively re-rated and tend to get extremely high valuations. So despite the fact that currently the Geo vertical is valued at somewhere around 5.5 lakh crore, I think market will be optimistic on the fact that over the next 5 years, I think one would not doubt that this particular vertical would be valued at close to 10 lakh crore. So I think this itself is a lot of value in it. Plus, I think the management intent to deleverage, I think that is astonishing. And pace at which they are doing has really surprised the market. So I think this is a good opportunity, the decline, and even if it further declines thanks to the weakness in its refining and petchem business, which is going to be extremely weak over quarter 1, I think there could be good opportunities for long-term investors to enter into this company.
Okay, we are minutes away from market open, and therefore let's tell you all that you need to know to stay ahead in trade today. First up, Godrej Consumer Products reports a 12% decline in sales for the fourth quarter. Net profit is down 75% as the base quarter had a tax reversal boost. It is also a weak quarter for capital good companies ABB India and Siemens. Revenue declines 18 and 21% respectively. Margins for both contract owing to higher other expenses due to COVID-19 impact. Siemens has also decided to sell its mechanical drives business to the parent company. The division accounts for 5% of the company's turnover. Steady 3% sequential growth for Mphasis in revenue, with net profit rising 20% on the back of higher other income. Maruti Suzuki will supply a derivative model of the Vitara Brezza to Toyota to sell in India and the globe. There's a second vehicle after the Baleno to share dual badging. PNC Infratech has been declared lowest bidder of NHAI's HAM project for 1,412 crore rupees in Uttar Pradesh. And in earnings today, watching out for Escorts, Biocon, and Tata Consumer Products, amongst the others. Parthiv, the last few days, any set of earnings that have stood out for you?
See, I think I was reading more into the Kotak Mahindra Bank earnings, Neeraj, and yes, I think on the face of it, in terms of growth in the loan book, won't look very rosy. But I love the fact that the management is trying to build an extremely resilient, rock-solid balance sheet. And look at their operational front, especially on the liabilities side. I think at 56% CASA, and especially the SA element where the cost is going to go lower, I think they're building extremely robust balance sheet on an operational front. And we like the fact that they are very much keen on trying to adopt the MSME lending structure thanks to the guarantee that has been announced in the stimulus. So that is also one business where they can earn a lot of spread because the cost of funds are extremely low. And I think we like such conservative management. The slippage ratio was extremely healthy. The NPA shown as on last quarter were extremely good, and probably going ahead, there could be more requests for moratorium, but being a very, very conservative lender certainly helps. And also the subsidiaries were firing with all power, and that is where I think a lot of future value can get unlocked. So Kotak Mahindra Bank, though at a very expensive 3.5 price to book multiple forward times as compared to even HDFC Bank, but certainly it's a great franchisee to own for long.
Okay, so great franchisee to hold on for long. Let's see what happens over the near term, though, and does it get you better valuations as well to trade in? By the way, HDFC Bank is sub 900. Aditya, any thoughts here? It was looking slightly resilient yesterday, has completely given way.
Neeraj, there is weakness in the stock without a doubt. On the weekly chart or on the monthly chart, if I take a look at the way the stock has been moving, 950 has been acting as a stiff resistance on the upside. And on the downside, 870 has been acting as support. So there is a matter of time before it breaks 870 and slides lower to about 800. I won't be a buyer here. Probably I'll wait for another decline to levels of 800 and then look to go long on HDFC Bank. 950 is a stiff resistance for the stock right now.
Okay, so no buying. I think that's the call that is coming in. So people who want to trade HDFC Bank, keep in mind. I think yesterday too, we had, well, one of our technical experts who was saying that it's in a no buy zone, at least as of now for him. Now, I want to pull up Tata Power, 8% uptick yesterday, another 2.5% uptick today. Market cap 8,000 crores. Forget the EV, they get receivables, I think, worth around 2,000 crores from this move. Parthiv has already said that Torrent Power is his top call, but Tata in the 2 days has done extremely well for itself. Quick thoughts out here, Samit Chavan. Would you trade a Tata Power? We are very close to market open.
See, generally we avoid this counter, but if it stays beyond 31.5, 32, then yes, it can certainly move towards 34.
Okay, so let's try and nail it down to the top call from our experts. Samit, to you first, your top call for the day today.
I'll go with Concor, stop 368, target 390.
Top call is Concor from Samit Chavan. Aditya, what about you?
So Neeraj, even I had a Concor as a top call, but okay, I'll also pitch in Apollo Hospital looks weak, so one should go ahead and short Apollo Hospital for a target of 1220 on the downside with a stop loss at 1320 on the upside.
Oh, it's completely fine. If Concord is looking strong, so be it. That is the top call from our experts. Gentlemen, just stay on. Actually, Samit and Aditya will. Actually, Aditya will let you go on that. No, not a problem. Samit, if you can stay on, I'll just want that quick Nifty view post open. Let's see how it does. Parthiv will let you go on that note as well. Really appreciate your time. Let's try and wait for the markets to kick-start trade and then tell you what should be top of the mind. But the markets look like starting off about 1.5% or maybe close to 2% lower, 9215 or thereabouts for the index, 9209 now. So the initial flash reaction will be lower. It might show a bit of a bounce post that, because I think there's a bout of disappointment out there and people believe that the markets are headed lower. The globe is not looking great. Let's wait and watch how this settles down. The first 5 minutes would be very, very choppy. We are likely sub 9200, just holding on to 9200 by skin of our teeth. Let's see if we dip below that. Infosys top loser, down about 5%. Tata Motors, Mahindra & Mahindra, Maruti Suzuki, that entire pack is really pulling back in the session today. HDFC Wipro too. I doubt it has got to do anything with the currency, because the currency showed some strength, 75.46 yesterday, but I doubt it's got anything to do with that. Tech Mahindra too, which is looking fairly resilient, down about 2.5%. Axis Bank, TCS. So strangely, IT is the one which has started off really weak in the session today. What is doing okay? ITC about 1%. There's some strength in Nestle. There are expectations of a block today that probably hasn't come, but it's still 16,660. Bharti Airtel in the green, so that's good news for a telecom watchers perspective. CLS big upgrade there. HUL marginally in the green. Kotak Bank in the red. Indian Oil in the red. Z marginally in the red, 1% lower. So the stronger stocks too are taking a bit of a beating, but that would happen because the markets have started off lower. Remember, if we bounce back from these levels, that's the key you are asked. Then what happens? What about some of the individual movers? First names that were down on my watch list. ABB actually doesn't start off all that poorly. Just about 1.83%. So nothing too dramatic for ABB in the session. Godrej Consumer too, nothing too dramatic. So that is also okay. What is Motherson Sumi down about 3%. Tata Power about 1.5% higher in trade, so do watch out for that one. ONGC too, just about 1.25%, so nothing too dramatic out there. And Reliance is marginally in the green, so do watch out for, in the red, excuse me, so do watch out for that stock as well. Very quick perspectives on the broader end of the spectrum stocks as well. Vodafone Idea is marginally in the red. There is weakness in Hathway Cable, down about 5.5%. Mahindra Holidays, the big mover in the last few days, is off by about 4% today. Bharat Forge about 3.5% today. Den Networks about 3.5% today. Any stocks gaining in a scenario like this? Well, Greenply, Century Ply, both the plywood names are doing well. Jubilant Life locked another 5% upper circuit. Shriram Transport up about 4%. I think NBFCs by and large probably might be doing okay. At least select NBFCs might be. And power companies, Adani Power, Reliance Power, etc. are all doing okay. Samit Chauhan, a quick opening thought on the index. 9228, we've kind of held the 9200 mark. No trade zone right now, or would you be tempted to take a trade?
Yes, we would certainly tempted to take a trade. As I said, we believe that for the day 9200 would act as a support. So I would rather go long in a 9200 call, which is trading around 75. So in case if I get this particular option somewhere around 60, that would be a good risk reward ratio. So I would still go long on 9200 call option.
Okay, so that's the call. Samit, Bank Nifty was the most active index yesterday. What are you doing here?
See here, 19,000 would be the level to watch out for. According to us, it should act as a support. As I've just suggested for Nifty, it is 9200. For Bank Nifty, that particular level is around 19,000. So for the day, we believe that Bank Nifty would hold that particular level.
Okay. And Samit, I know you mentioned that you don't trade Tata Power, so I'll leave that out. But amongst the NBFCs or the power companies which were so active, is there a stock that looks interesting to trade? Because those are the ones that have some tailwinds to themselves.
The REC is the one stock that was certainly buzzing yesterday. It has already given a massive breakout among this volume, but stock has already moved up a lot, and today also we are seeing another 3.5% uptick on this particular counter. So risk reward will not be that favorable, but we believe that REC over the next couple of weeks can head towards 108, 110.
Okay, we would leave it at that. Samit Chauhan, thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time. Well, the markets have just shown a bit of a flash bounce. Let's see if this gets sold into, or do we find support, material support at just 90 to 34 levels and then show some bit of an uptick? That's the key question. IT has certainly taken it on the chin. There's something that's happened in IT stocks. I don't know if it's got to do with the currency or some visa issues or otherwise, because IT is the top loser in the session today. Mahindra and Mahindra is down about 2.5%, so do watch out for that as well. ICICI Bank about a couple of percentage points lower. So banks have obviously given off completely all of those gains. What is doing well? Bajaj Finance, 1.5% higher, 2193 or 2194. Z in the green, so that is some good news. Bharti Airtel in the green, so that is okay. Dr. Reddy is in the green, marginally at that. And HUL, as I said, not staying around the levels of 2000 odd, so that is doing okay. Britannia is doing okay too, just about stepping into the red, but Bajaj Finance is the top gainer, 2194. I think a couple of brokerage calls extremely bullish on this one. Morgan Stanley, I think, has cut the target price, but still the target price at 2700, 2730. And HSBC's target price for a Bajaj Finance is at 3700. So, well, those brokerages are fairly bullish on Bajaj Finance. Do watch out. That one is holding out okay in the session today. Those are a few names on the large cap space which are doing okay. We should be getting Rajat Jain of Principal Mutual Fund in just moments from now. It's important to understand from the impact on the yields, the currency as well, and how do equities, the multiples, etc., all behave. Rajat, good having you. Thanks so much for taking the time out. What's your initial sense, Rajat? This announcement seemed a lot less fiscal, lot more supportive, backstops, and therefore, is that positive for the yields, do you reckon? Because otherwise there was this lurking fear that ratings, currency, and yields, all of them might come into action if indeed it's a larger fiscal-led support.
Yeah, thanks, Neeraj. See, I think in terms of the ratings, you see, I think if you look at India, and we are good on the current account side, I think, but where we have our potential challenges, the ratio of outstanding debt, that is government, central and state government debt to GDP. Now the ratio is important. And if the denominator doesn't grow, that is the GDP itself doesn't grow, the ratio potentially tends to increase given the amount of borrowing that the government is going to do. Even though RBI is going to be, is certainly going to is in action and will be called into action given these special situations that we have prevailing now. So to the extent that the government, it's important that the GDP needs to grow importantly. So we need some stimulus, and in a sense it's good, it's focused on the MSMEs. So, potentially, so the GDP probably doesn't grow much in this year, FY21. Instead of GDP growth will be close to zero possibly, but potentially in 22, you see a better GDP growth number. So it's important that GDP grows. And it's important that it grows because otherwise that the ratio of outstanding debt to GDP is going to look much more adverse. So there are two things. I mean, we have two rating agencies who are at BBB minus. There's one who is at BBB, probably with a negative outlook. So I think it's possible. I mean, they all come down to BBB minus, but I think it'll be some time before they even consider putting India into a junk grade. So I think yes. There's a lot of stuff that the government needs to do, but I think a rating downgrade or even a consideration, at least pushing India beyond BBB minus, still a long time away. And before that, I think the economy should revive. So potentially we don't go down that route at all.
Rajat, as somebody who watches economy, markets, and I would reckon both sides, were you disappointed with the package that was announced yesterday, or do you believe that was the right thing to do? And is it market constructive, is it market neutral, or is it market negative?
Well, I think, okay, there's still probably part one, a couple of more which are likely to come. And if you start from the PM's speech, what he said day before yesterday, I mean, obviously the support is part of that. And then other things like reform, changes to certain laws regarding land, regarding labor, things, infrastructure spend, is all part of the bigger package, as it were. But I think the highlight of the package, there are two main highlights, I think, as far as I'm concerned, for the package yesterday. One, obviously, which was the headline news today, that 3 lakh crore sort of guarantee for MSMEs, which I think is very critical, but there are people who are really under stress. I mean, they employ a lot of people, and to that extent does have an impact in terms of the underlying consumer demand. job creation. All of that is very, very important. And the way they're doing it, I think, relatively straightforward for people to execute. So the bank up to 20% of the outstanding loans to MSMEs. And because it is guaranteed by the government, it doesn't call for capital charge. So the capital needs don't go up. And while, I mean, not all of it will be well, some of it, probably goes to set off outstanding loans and so on, but still, I think it's still a very important piece. I think that MSME gets support is very, very key. The second thing, obviously, is the DISCOM support about what they are doing, because DISCOMs have been under stress, and it's not recent. I mean, the last 1 year, 15 odd months, we've been seeing the amount of outstanding debt, outstanding payables that DISCOMs need to make is going up. So that's important as well. So I think these two are the key takeaways. And to your question about disappointment, I think it's work in progress. And it's a very challenging situation. So the government is trying to come with creative solution. I mean, they had something on that fund, which is 10,000 crores, and it probably levered up to 50,000. And it's the first time that potentially government looking to that fund will invest into equity for SME. Those are creative solutions. So yeah, I think
I think we're just losing Rajat briefly. We'll just try and reconnect and try and figure out his thoughts on the power space as well, because I think that's the active one in the session today. I mean, just look at what's happening to power really in trade. Adani Power, Tata Power, almost everything related to power is doing well. Maybe not NTPC, because I think that one-time hit kind of spoils the picture, but all of these names are doing well. BHEL is up another 5.5% at 28. A remarkable up move today in BHEL in the session today. But Tata Power and Adani Power are the two top performers in the session today. Torrent Power up about 4%. So I think power is the pocket, which is the most active one. If we have Rajat back, Rajat, we kind of got the gist of your answer, the last one, before we lost you a bit. Okay, I don't think we have him, unfortunately. We'll just try and see if we can get him for a couple of more answers. Quickly, some market spotting while we just wait for Rajat's feed to get connected. Tata Motors correcting a bit, so about 3.5% lower. Yes, it's about 3.5% lower. And I think companies like Bharat Forge, Motherson, and some of the other auto ancillaries too have given way in the session. So that's one pocket that is looking slightly weak right now, global auto. Let's wait and watch if once the economies open up, does that sentiment turn around? Because the valuations for some of these stocks might be on a relative basis, fairly attractive. What is doing well? Jubilant Life is up about 5%, so that is okay. There is strength in Magma, FinCorp, Edelweiss, some of the other smaller NBFCs. So that's the other one. I mean, GIC Housing, Diwan, etc. is separate, but some of the slightly larger ones also have some benefits to themselves. What is one doing well? I think the likes of, I mean, the small cap space is all sketchy names which are correcting in the session today as well. But as Rajat was referring to, and as I was saying, power seems to be the order of the morning. Rajat, do you think do you think that this is a day's positive of sorts? Because the counter view that was given to the bullishness in a stock like NTPC, for example, was that there was never a doubt about the receivables. They would come in at some point of time or the other. But this hit that has been taken or given, that ROE hit, sets a bit of a wrong precedent, and that might be negative for companies like NTPC and Power Grid. What are your thoughts here?
Yeah, without getting into specific names, obviously I can't do that. But I think these are like special circumstances, and I mean, even the DISCOMs are under, there's a sharp fall in demand. Those issues, the underlying business. I mean, if you look at the manufacturing companies are shut. So who are good, like related, people who pay higher tariffs, or service industry is shut, who again pay higher tariffs. So I mean, this is a special situation for DISCOMs, and so it's, I think, given the entire environment And it's a limited hit. It's not a, it's a one time. It's not something which is ongoing. So I can realize where it's coming from. So I think one would look at it in sort of that perspective.
Okay, Rajat, my final question to you is, how constructive are you on telecom? Now, apparently the companies, or Bharti Airtel in particular, has submitted a proposal for some base tariffs, etc. That sector is buzzing right now, lots of money moving in as well. But if you look at a 10-15-year view, after a hibernation of 10-12 years, it's just come into the limelight in the last 6 to 9 odd months. Do you reckon that the runway is wrong, even though the sector may be narrow?
Yeah, I think so. I mean, there are enough tailwinds behind it. Consolidation obviously is there. Demand for telecom is just, I mean, we have seen this work from home, what it does to demand for bandwidth. So, I mean, the runway is there to stay, and incrementally, I mean, we don't see incremental competition coming. Pretty much all the global players have tried their hand here. So I think we had a consolidation. So I really think the telecom has a good runway ahead.
Rajat, any final thoughts? I will ask you a few things that I wanted to ask you. Anything interesting that you've observed in the last few days which you would like to share?
No, that's an interesting point. What's I think going to happen is that it's certainly we are not in the camp that sees a V-shaped recovery. We will see that the economy will take longer. I mean, the longer the lockdown is, the longer it's going to recover. But hopefully, probably this quarter is not going to be good. But Q3 and Q4, hopefully, we should see beginning to see some recovery going forward. I think the biggest thing what the government has done yesterday. I mean, the friction. I mean, if you look at the velocity of money. I mean, if you look at the money multipliers, the government. I mean, RBI is fusing to terms of liquidity, but the multiplier has shrunk because the banks are being conservative, risk averse. So to the extent that the government comes with guarantee sort of schemes, hopefully the multiplier gets better and money again begins to flow in the economy, which I think is sort of a good thing for the economy in the medium to long term.
Okay, Rajat, we'll leave it at that. Thank you so much for taking the time out and being with us and giving us your thoughts. Really appreciate your time.
Sure, my pleasure.
And viewers, it's played as per what Samit Chaman was saying. There's a bit of a bounce in the markets, about 1% lower only for the Nifty 50. Right now, it's not as slam dunk as we thought it would have been, 9274, so just about 1% lower. What is corrected a lot is IT. I don't know if this has got to do with the US economy weakness that the markets are extrapolating that to the IT names, but those stocks are certainly corrective. What is doing well? Bajaj Finance 2.5%. There is strength in FinServ 2 obviously as a result of that. Z Entertainment marginally in the green, but Bharti Airtel has moved into the red slightly, but in the red, never mind. I mean, but in the red nevertheless. And Reliance Industries is marginally in the red as well. So those are a couple of names, but mind you, that happens to companies at times or stocks at times. After having a rally, there's a bit of a distribution for a few days, and then the next leg of the rally begins. So that could well be the case in telecom right now. I'm not predicting it, just saying that could well be the case. So do watch out for that. ITC is back to being in the green business, about 1.5% higher in trade. It's a good going. At the broader end of the spectrum, really, the heroes of trade today are the power names, the likes of Tata Power, Torrent Power, Adani Power, and the likes. So those are the ones. Remember, we have a conversation with Tata Power lined up today at 10 a.m. So you probably want to tune in for that to understand how big the management thinks the current deal is. Thanks so much for watching this leg of Indian Open today.